Welcome. Thank you very much for taking the time out of your afternoon to come and listen to what we have to say. This is the second part from the two-part series that we like to run. The first part was with me. It was 7 o'clock at night. I had a beer and had a rum as well, if I remember correctly, with a Hawaiian shirt on, considering it was the holiday season. Today I'm just drinking coffee, so don't worry. Product placement, Nescafe. Yeah, look, it's in the middle of the afternoon. We're going to be running through a bit of a trade session. We'll get into that in a moment. First, I just quickly want to share our screen so you can see what's on in front of you. All right. And yeah, so if you've got any questions, as the screen says, type them in. Very happy to kind of answer them as we go. But if we miss any, we'll get them at the end. We also, if you've got any kind of technical issues, if sound cuts out, check a YouTube video first. But if that doesn't work, give us a call at the office and we'll try to help you troubleshoot. Before we get into the guts of it, it's good to kind of run through who we are. If you didn't get to watch the first webcast, you should have had a recording of it. If you didn't see that, because maybe it went to your promotions box or something like that, just type in the chat that you didn't get it and we'll make sure it gets to you. The first webcast was myself just kind of running through all the basic principles. So it's a really good session to kind of catch up on if you haven't seen it yet. It's good to kind of fill you in for those of you who are joining us for the first time, who we are. We're Traders Circle and we're Emerald Financial. Traders Circle's been around since 2005. That's quite some time. I'd say what's that, 16, 17 years now. Yeah. And Tim and I both have been there for about half of it. Yeah. So we started working around the same time, I think.
10 years is October, guys.
It's too long in some ways. But what is it? You get the long service leave coming in at 10 years time. All right. So Trader Circle deals more with trading those. We're more focused on shorter term styles of in and out kind of income generation, that kind of approach. So typically higher risk, but higher reward, obviously. And considering that, one of our biggest focuses of Trader Circle is providing support and really solid education. Because if you're going to go into a high risk environment, it makes sense that you understand what you're doing through a good education. And it also makes sense to have a bit of a mentor, a support group there, someone that you can call on a regular basis to kind of have your back as you trade in that high risk environment. Emerald Financial, on the other hand, is more longer focused, right? So it covers the medium to longer term, a little bit more about investment and capital gains. We put out recommendations like Trader Circle, but more for stock picking, kind of like a buy, hold, sell kind of scenario. That's very popular. So far, so good. I think we've been doing really well in that area. So if you're watching today's webcast or you watched last webcast and you think, oh, maybe high risk trading is not for me, have a look at Emerald Financial. There's some really good stock screeners there. We tackle both the local markets as well as US markets. I think we can actually have a look at a lot of other markets as well.
Absolutely. We've got access to worldwide markets from an equities point of view, guys. So we're now not just restrained to Australia. We're looking all around the world for investment opportunities, which is fantastic.
Yeah, it's a good way. I mean, it's not necessarily about doing one or the other. Quite often, people like to do both. Have their long-term investments, and they kind of squirrel away a nest egg in that capacity, and then look at Trader Circle as a way to have a hobby or an interest, or maybe even work towards being a full-time trader as a job for income generation.
Very different approaches, I guess. So that hence the two different brands, and the reason why we run two different brands. Trader Circle is all mainly derivatives trading and technical analysis-based sort of trading, where Emerald is a lot more fundamental. So we're looking at the company, doing a lot more fundamental analysis, and then just buy, holding for a much longer period of time. So it's just very different approach to the market. When we're on the Emerald side, we've got our investors cap on, on Trader Circle, we've got our trading cap on.
That's a really good point, actually. I mean, it was something that I mentioned in the last webcast. The last webcast was really mainly focused on technical analysis because it was a trading webcast. We're going to stick to the same thing because that's what the series is about. But we do have videos on fundamental analysis and longer term investment under Emerald Financial banner, and you can find that all on YouTube. So if you haven't had an opportunity yet to check out a YouTube page, please do. If you like what you see today, it's kind of similar, but obviously different content.
Yeah, and that's why we run these sessions. So you can actually see what we're doing on the Trader Circle side today and see whether that fits in with what you want to do. But if it does, then you can sort of dig a bit deeper into what we do. But if it doesn't, then look at Emerald or something else. But this just gives you a window in on what we do on the trading side.
Yeah, for sure. So that actually brings us to, it's actually a really good segue into what we're doing today, right? So we're going to be covering a few things today, as you can see on your screen. We're going to talk for however long for the market view, just give you an understanding of what we think is going on at the moment. It gives you a bit of an insight as to the dynamic in our office as well. We're missing a few other people, obviously. We don't want to crowd the room, but we every day, at least twice a day, we kind of how we talk, how we're going to talk about the market is kind of what we do pretty much every day. We'll look for some new trades, give you some trade examples, and then I'll jump on in the end and just talk about some of the education programs we run, talk about some of the skills you need in order to be a successful trader. But today is, I would say, a bit of a carbon copy, or a bit of a template for something that we do every day for our clients from 12 to 1.
Yeah.
So I run my webcast on a Wednesday, Tim runs his on a Tuesday. Our colleague Sam, who also runs a lot of Emerald Financial videos, he runs his webcast today, so he just finished. And what we do is we essentially go through the market, we look for trades as a group, old clients jump on, new clients jump on, just as a trade group. We just get together and we talk about potential trade ideas, talk about trades that we're in, talk about the fundamentals of the company if you want to go down that path. But we, mainly stick to technicals because most people are trading, but we cover whatever we need to cover. Yeah. All right.
Let's get into it.
Before we do though, any advice contained in this presentation is general only, so it's not tailored to your personal circumstances, and you therefore need to decide for yourself as to whether it's appropriate to you. All right.
Perfect. All right, let's get a chart up in front and talk about this market, okay?
So when we talk about this market, we're talking about the XJO, right? So in case you weren't aware, the XJO is the top 200 stock weighted by market capitalization. And it's important to know that, I think, right? When someone says to you the market was up today or it was down, this is really what they should be talking about, in my opinion. I think you can get more, but this is, I would say, a pretty standard approach. It's also known as the ASX 200. The XJO is, I think, another, if not the more correct term for it.
So I guess let's start off with the technical side of it, because that's a little bit what Caro covered in the last session. So let's just start there, and we'll start talking about some of the reasons why our market's pulling back at the moment. So I'm coming out, I always start at around a roughly 2-year period, right? So I want to see what the current trend is and what it has been doing over the long term first, right? So that's where we always start. And that's the bottom of COVID, right? So from there, we were on a fairly consistent trend for a while, weren't we, right? And you're probably safe to say that uptrend through here, high peaks and troughs, there's more coming to a bit of a channeling pattern right now. Okay, so although in the medium to long term, we probably still hold the view we're going to uptrend overall. Yeah. Right now, though, since really August last year, it's been a channel. And so what we always do is go, what's most relevant right now? Well, that long-term uptrend is really not that relevant, is it? Right? Not right at this point in time. So I'm not going to even bother drawing that uptrend line in right at this point. I'm just going to really focus on this sideways channel. So that's the current pattern we're stuck in. Yeah. We've been stuck there for a while. It's very consistent.
Yeah. Right? And so what Tim's highlighting is that it all depends on what time frame you're looking at. Because even though over the past 2 years we've been uptrending, just because that trend line is broken, that doesn't mean we're not uptrending anymore. Yeah. It just means that it might over year periods we're uptrending, but that doesn't help Tim and I trade in the short term as much, right? So Tim's now going, okay, well, from a 2-year period through a year period, we might be uptrending. I mean, even if you looked at 10 years, we're probably uptrending, right? I mean, it doesn't take a big brain to say that markets go up over time, but we're not trading that time frame. So Tim zoomed in and he's gone to this kind of 6-month, roughly maybe 8-month period. And the dominant pattern quite clearly is that it's tracking sideways. But if we wanted to zoom in further, even throughout sideways periods, you have tighter channels, you have an uptrend, you have, I mean, this is quite clearly a downtrend, lower peaks and troughs there, another uptrend, sideways trends. So there's, it all kind of, I mean, you could go into a 5-minute chart if you wanted to and talk about the trend there as well, right? So it's all about what time frame you're looking at.
And most of our strategies are based on a 1-day chart, guys. So I said what that means, each one of these bars you see in front of you here is 1 day.
Yeah.
Okay. You know, a lot of our strategies are either options or mini warrants based. You know, we don't really day trade. Okay. Really, our trades go for a couple of days to maybe a couple of weeks, and at most maybe 2 or 3 months, right? Depending on the strategy. So you know, right now, what's the market doing? What's the momentum in the market, right? So we know medium term is sideways, right? And that's relevant because we're starting to come back down towards those support levels that we've been using since August last year. And if nothing really much has changed from there to here, well, there's a high chance we'll probably hold these levels, right? So there's a few things you'd be looking at right now, and I guess you'd be drawing in a little bit of a downtrend line through here, right? And that just represents the current momentum, right? You can see you've got a slightly lower peak than the previous peak here. You've just created a lower trough than the previous trough. So the momentum's down. And as traders, we're going, okay, well, can we trade that downward momentum? If not, what are we waiting for to get into a trade? Right? That's kind of where we're at the moment, because we've had quite a bit of falls. The market's looking a bit oversold from a lot of our indicators that we use, and it's at key levels of support or nearing key levels of support. So I guess if you were bearish the market from up here, you'd be starting to look to take profits too, right? Because we're starting to near these key levels of support. For us right now, we're probably looking more for, okay, where's the signal to get in and go long? The market's just so unsold.
Yeah, and I think part of the reason why we're able to do that is because we know that the dominant pattern is a channel. So even in the short term, there's bearish pressure, and it's important the language that you use. So Tim and I wouldn't call that a downtrend, not yet anyway, but there's downward pressure. And I think you've got to be careful with your language, because if you start going, well, it's in a downtrend, then your brain might go, well, don't trade against the trend, so do a bearish trade. But Tim and I are aware that that's not a downtrend, it's bearish pressure, but the dominant pattern is the channel. So as we're edging towards the bottom of the channel, our brains start going, well, let's start looking for perhaps bullish trades, you know?
All right, so really where we're at the moment, guys, is we're nearing some very key levels of support. I would also potentially be looking at maybe something like this, okay? And that's a bit tentative at this point, okay? If we hold this level and bounce, guys, and show a bullish signal, then this becomes a valid trend line, okay? But right now, it's very tentative. So
make it a bit thicker.
Yeah, I'll make it a bit thicker so you can see that.
Yes.
Different color, okay? So look, and this is what I mean, and look at today's bar, right? So we went through, I'm pretty sure you guys went through the bar analysis and what a bullish day is and things like that.
A little bit. I didn't go too much into kind of candlestick analysis, but I just went into, I showed momentums.
Yeah, so one of the things that's showing today is a bit of uncertainty, okay? So they call that a doji, sitting open close almost the same levels, okay? So that's where the buyers or nor the sellers can really take control of today at this stage. Okay.
And they're caught, right? Because it did go up, as you can see, and it's got a wick, and it's got a tail. So it's definitely been fighting throughout the day, so far anyway. But it's only 1 o'clock, right? You've still got 3 hours of trading, and a lot of volume comes in the afternoon.
Now, why is this significant? Why are we looking at the exchange? Well, it is the top 200 stocks, right? So collectively, the momentum's been down on most stocks at the moment, okay? And because we're at a key level of support, I'd be hesitant to go bearish today unless it's a stock that doesn't tend to follow the overall market, okay? So why we do a market view is always that ties into what type of trades we're looking for that particular day, week, month, whatever, okay? Yeah. So it's good to sort of, if you can marry up a market view with a view on a stock, it just gives you levels of probability of success. And that's part of what we do as traders as well. So.
Yeah, it's like the analogy that I used during the first webcast is like painting a picture. And really what you're doing is just trying to get all these elements together so that the image becomes clearer. Some artists are a little bit more abstract. Some artists use like to the imagination for the viewer, if you know what I mean. And some people like to be hyper realist, where every little detail matters. So it depends kind of where you're at, but we think that market sentiment should factor into your decision-making process.
Yeah, absolutely. The other market that I like to look at to gain a view is the US market, because we tend to follow a fair bit of the US and what they're doing. If they're downtrending or if they're having a bit of a pullback, we tend to be having a bit of a pullback as well. Not always to the same degree. Okay, so you would see at the moment the US market's fallen off quite a bit more than what we have. And also they're still in an uptrend where we've been sideways since August. So there is definitely, it's not apples and apples, right? But in the short-term movements, if they're pulling back a lot, we might be pulling back a little. If they're rising a lot, we might be rising a little, right? There's definitely a relationship there that you can't ignore, okay?
Yeah, especially if you go, oh, well, the charts don't look the same, but they were down that day and we were up that day. A lot of the time, our move will also can be dictated by their futures during that session. So even though if they're down last night, but their futures are up a lot today, we could be flat. And we see that all the time, that where their futures really inform our intraday movements as well.
So this is their top 500 stocks. Okay, so the S&P 500, you hear that talked about a lot out there. The Dow Jones is the other one. We like to use the S&P 500 because it captures more of their market. It captures a lot more different sectors. With the Dow, just 30 stocks. It's very industrial, very financial. There's not a lot of tech in the Dow. So S&P 500 for me is the better index to get an overall feel of what's going on in the US.
Yeah. When someone says the US market, they really should be referencing this. I mean, if they said the tech market, then maybe they're referencing the NASDAQ, for example, the NASDAQ 100. But yeah, this is the market for the US in our opinion.
So you see here since COVID, they've been in a fairly consistent uptrend, okay? They've only really been going sideways since maybe November. They've been going sideways into their uptrend line. So at this point of time, it still has to be medium to long-term bullish, this index. There's no indication here of a breakdown or a bear trend, okay? This is a pullback. It's healthy. It's normal. I invite these pullbacks, guys, because it opens up great opportunities in the future. This type of market here, where my mouse cursor is, sideways for a whole month, is very, very difficult to do directional trading. You almost get a day trade if you want to trade, right? Yeah. Our style of trading, we want these nice, big, swooping moves. Okay, we like the volatility. We invite that volatility, actually. Okay, so they've been going sideways since November. They're meeting up with their uptrend line. There's a lot of key support through 45 here. So once again, we're in a similar situation where it's kind of sit and wait. If you haven't made money out of the bearish move yet, there's not much left of it, in my opinion, right? Maybe, okay? And obviously, this is always a moving target. I could be talking very differently tomorrow if this market breaks down and something else negative comes out. You can't talk in absolutes, but at this point in time, we've had a 5% movement down on the S&P 500. If you were to go back over time, over the last few years, it hasn't really fallen much more than 5%, has it? Right? Yeah. So that's roughly 5% there. Okay, so it is very oversold. So if you've missed the bearish move so far, you probably have missed it. Okay?
Yeah, I think if you're on a bearish trade, it'd be very speculative to hold it tonight.
Absolutely.
I mean, and Tim's pointed out, that's at the bottom of the channel. Of course, the channel can break, and with new information, our opinion is going to change. You don't want to be someone who's stuck to your opinion because it means you're not malleable. If it breaks down, where's our target? Like 44, 43? Right. So we already this morning and probably yesterday, I can't remember. We probably already talked about where our target is if the support breaks. So we have our view, but we also need to be aware of what could happen if we're wrong, and then we try to plan for that.
There's a lot of technical reasons that if this level breaks, 43 is the likely target. So
yeah,
I won't go into too much detail there because we'll end up with too much information. But
yeah, true. It's already
20 past. So, look, if this level here breaks, you're breaking the trend line, you're breaking key level of support. Yes, we could then be seeing the S&P 500 going for a correction. That correction is about 10% to 4,300. Okay, and the final correction is 10%, right? So there's a lot of reasons why 43 could be the next target.
44 on the way as well. You know, I think 44 is a good level.
But to sort of summarize the market view right now for me, I'm sort of going, okay, in a very, very short time, I'm very uncertain, okay? I'm still not certain whether we're going lower or not, okay? In the medium term, I'm still quite bullish. A lot of dynamics of what's driving the US market down right now, I think that sentiment will clear up over the next few weeks and will drive up into February. I don't know where the bottom is, guys. I'm not going to pretend I know where the bottom is. You shouldn't try and pick the bottom. You always should wait for the technicals to line up before you switch to a bullish trade if the market's been pulling back. Okay, and that's why we lean on that type of analysis, because it's best to help predict the short term. Okay, so it doesn't matter what my view is fundamentally. I always get into my trades based on technical signals.
Yeah, and I mentioned this last week. There's always people who prefer one camp or the other, but I implore you to always consider both. If you're longer term investing, lean on your fundamentals, but time your entries with your technicals.
Yeah.
And even if you're shorter term trading, like what did we do the other day? We did a mini on JBH just before the report. But part of the reason why we entered was because we liked the company fundamentally, but we entered the trade at the time because the technicals lined up. So you know, and that's I mean personally, that's how a lot I like to trade as well. Like, yes, you don't, if you're short-term trading, you don't need to worry about the fundamentals. But if you want to perhaps refine your process a bit more, you can maybe just do bullish trades on things that are healthy, that also line up technicals. And if you're, you know, you can always trade bearish with mini warrants and stuff like that on companies that you think are oversold, you know, fundamentally, and you wait for your technicals to line up as well. Yeah. All right, do you want to leave it there? And
look, I might spend the next sort of 20 minutes, 45 minutes or so just running through some stocks, give you guys some examples, show you a bit of what we do and how we analyze the market. Obviously, I'm not going to show you everything. Okay, that's what we run. You know, our courses run over 2-3 months to teach you all this stuff. So you're not going to learn everything in this session. No. I'm just going to give you a quick sample of what we do.
I'll leave you to it, and then I'll come back in about 20 minutes or so.
Okay, fantastic. So look, I might as well start here, guys. Right? So this is actually a trade that we did, you know, a couple of days ago, right? Now, why? Why did we get into this trade? I just want to sort of analyze that for a moment. And the first thing you're going to identify here is what pattern was I talking about before? A channel pattern, okay? And that's exactly what JB HiFi has been doing since September of 21, right? It came up to 44 and it has not been able to move past to that 49.50 resistance up here. So it's just been whacking around support and resistance. And guess what? This time around, what do we think is going to happen at support? Nothing has fundamentally changed for us on this stock. It's a cheap stock. You know, the forward data is fairly flat, which means their you know, earnings aren't going to really grow too much over the next few years, and that's why this is not uptrending anymore. There's reasons for it not to be uptrending. There's no reason for it to correct. It is very cheap from a price to earnings point of view at these bottom parts of these levels of the channel. Okay, so then, you know, fundamentally we're okay with it. And then, you know, as it comes down to the bottom of this channel, well, of course, we're going to be waiting and watching for a bullish signal. And that's exactly what it gave us, right? You can see the buyers came into control. The bar analysis was there. The momentum shifted from down back to up again in an oversold position. So our indicators were all oversold. That is, you know, almost a picture perfect signal to get in, right? The only argument that you could have had on this trade is whether it was at resistance or not, because there's a bit of resistance there in the middle of the channel. Okay, for us, we believe at some point it was going to jump back to the top of the channel. The strategy that we're doing is a mini warrant, which means we've got heaps of time in the trade. There is not a time problem there. Okay, so, you know, for us, we didn't worry that there was a little bit of resistance around. Okay, all right. So then, as you can see, the next day it just popped straight up. Now, we weren't expecting it to pop up that quickly, guys. Right? It actually reported that night. They liked the report and they gapped it higher. Okay. So we actually got out the next morning, right? We just straight away at 10 past 10, we sent an SMS out to all of our clients to take profit and close the trade out. Okay. So, yeah, that was a good trade, right? Good overnight trade. All right. So as actually, what I might quickly do here, guys, is just show you what we send clients, just so you can get a little bit of a feel for how we conduct our recommendations and our ideas. So just give me 2 seconds. Excuse me. Okay, so here's the trade, 17th of the 1st, okay? We give you the code of the particular mini warrant that we're trading, the strike, the stop, all the information you need. We even suggest an amount of contract and risk, okay? That's always the suggested amount. You can always do less or more, whatever you're comfortable with. And what we do is we give you a matrix, and you actually get access to this as part of our membership as well. We can put in the amount of risk that you're willing to do, and it gives you a payoff for the movement up or down in share price, okay? So this is an important part of our risk management, and we teach this through our courses as well. So what we want to do is make sure we can make enough money if it does jump up to resistance, okay? So if I click back over to Iris real quick, sorry, a second. You know, resistance on the channel itself could have been either 49 or 51, right? Around those sorts of levels. So coming back over here, if it got back up to 50, you made $1,200 profit on that trade. Now, there is an interest payment you have to pay with these types of derivatives. It's only a small amount, and you can see here, you know, this is if you were to hold to the end of February. It doesn't really erode away your profit all that much, does it? Okay, you're looking at $80 for that period of time. It might even be a little bit less than that, because this is assuming an interest rate of 5.35. I'm pretty sure it's lower than that at the moment. Okay, so basically, what most importantly is, where do we get out? Okay, and that's part of our risk management as well, is just making sure you identify, because we don't want to lose $3,000 on a trade, right? Like, there's just no way. This, you know, we're not gambling here. We're not going red or black. Okay, this is trading. A big part of trading is risk management and closing losing trades at the right time. Now, what would have been the logical level on a day like today to close the trade? Okay, if it started doing what we didn't want it to do, well, 44 is a logical level, isn't it? Right? If it zoomed back out, it hasn't, you know, that'd be a break of the channel. So somewhere around 44, 43.50, something down here, you'd have to have a stop. Okay, so that's the next test we would do before we send a trade out. So at 43.50, how much do I lose? Okay, about $900. Okay, you have to be comfortable with that to do this trade. We don't want to be losing $3,000, guys. That's just not, you know, that's not how we make money out of trading. How we make money out of trading is getting more trades right than wrong. We don't get every trade right. Nobody gets every trade right. It's impossible, yeah? But on the losing trades, we've always got to cap the loss. You can't be losing maximum on a trade. And that's the big part of being a talented trader, is being able to close out the bad ones, right? The losing ones. A losing trade doesn't have to be a bad trade, guys, right? It's the cost of doing business. You know, that's a big part of managing psychology as a trader. All right, so let's go through some more trades, some more ideas of what's happening out there right now. So what's looking good to me right now? And guys, if you've got some stocks you want me to quickly look at, please put it into the Q&A box now. Happy to go look at a few things for you as we're going through as a live session. And that's exactly what we do through the trade group sessions with our clients. Is we really encourage everyone to put the codes into the chat box, and we, you know, it becomes quite a dynamic session. All right, so BHP. Let's have a look at that. Always starting further out in time, okay? Where does the trend start? Well, in a sense, this particular trend, there was a downtrend through 2015-16, and then we picked up, you had the COVID dip. That's probably where this current trend began, okay? So that's where we want to start our analysis, is where the trade began. So I'd probably say something like that best represents the current uptrend on BHP. You see, it was a lot steeper than that at one stage. Okay, so that ended because of COVID, and then when COVID recoveries kicked back in, it had a very steep trend for a period of time there. For obvious reasons, if you're following it last year, you had iron ore above 200, and it came crashing back off, which caused that big pullback. So you can see there's trends within trends within trends, right? So overall, this best represents that long-term trend, but in between you had different things going on, okay? But is any of that relevant right now? Well, not really, right? So I'm not drawing these lines in. Okay, what's relevant right now is this. If we did have another pullback and it came back to this line, I'd be watching it very, very closely, right? That's when that line becomes relevant. Even right now, that line is not really all that relevant. We're now in a short-term uptrend. You can see higher peaks, higher troughs, higher peaks, higher troughs, and we've just broken through another key level. Okay, so just where I've got this blue line here, you can see there's lots of support through there and lots of resistance all through last year. Very strong level, and it took 5 days to break that level. I honestly thought, guys, right, through this week, that we might have seen a bit of a pullback to this uptrend line here. Okay, so we're on another acceleration here. Now we've got another bullish signal suggesting that that trend is going to continue. Okay, technically we've got signs of continuation on BHP today. So we would be considering a bullish trade here. It's a bit overbought, so you're going to be a bit wary of that. There might not be much movement left in this trade, but you could easily get into this with a stop at this resistance level. If it broke that, you take a small loss. If it keeps running up to the next level of resistance, which is about, say, 52 here, fairly close to 52. All right. So you can see that through there. There's a level there. There's another level here, just at 50.73. So if we could make some money at sort of 51, 52 levels, okay, then that might be a trade, right? So how do I know that? Well, the first thing I'm going to do is go straight into my option calculator here and price it up. Just give me a second, sort of zoomed right in for some reason. Obviously trying to look at something a bit closer earlier. That's better. I'll refresh here. Give me a moment. Okay, so BHP. Now, this is all the mini warrants that are available on BHP, various different gearing levels, okay, and there's automatic stops built in. I'm not going to go too much into what mini warrants are. They're a simple derivative, guys. They are a really good derivative for people starting out, okay? If you've never traded, a mini warrant before, or if you've never traded a derivative before, this is a very good starting place. Okay, there's no margin. Okay, there's no additional leverage other than what you see in front of you. They all move one-to-one with the share price. It's simple, very simple to price up and understand. Okay, no margin calls, guys. Right, CFDs, all that sort of thing. You got to worry about margin. There's no margin here. You've only got to risk what you outlay in the trade. Okay, you can't lose any more. If you put $2,000 on the trade, you can't lose any more than $2,000. Okay. So they're really simple, and this is why we love them, especially as a teaching tool. We teach people mini warrants first, and then once they understand mini warrants and they get good at picking the market, they get good at technical analysis, then we start teaching people options, okay, exchange traded options. And that opens up the world of different strategies. And I will show you a strategy before I hand back to Caro today that we're currently doing on the XJO, the top 200 stocks, right? Because we can trade options on, and mini warrants on indexes. In fact, when you think the Nasdaq's bottomed out, we can trade a mini warrant on the Nasdaq. Okay, from an Australian account. Okay, you don't have to have an American account for that either. All right, so let's run through this for you. Yep. So someone's asked, what's the best price to enter for BHP? Look, the best price is when I got into it back down here at 36. So I wouldn't say today is the best price to get in. Okay, especially from an investing point of view, I might wait for a pullback. For a sneaky little trade though, right, a little mini warrant trade up to 51 or 52 over the next few weeks with a tight stop, today's the day. Okay, so you've got everything that fits our rules other than the fact it's a bit overbought. So we need to be careful of the overbought status of this stock. Okay, I bought in down at say 30, I think it was about 37.50 by the time I actually got into it. It was probably this day here where we had that breakout has got me in. I bought stock. And I also bought a call option on this, okay? And made a bit of money. I've closed out my call option, and I'm now just sitting in the stock, and I'll probably hold the stock long term now. So for me to sell the stock, I'd have to see an end of trend. I'd have to see, this type of thing starting to play out, and I'd sell my stock. So to answer your question, from a long-term perspective, which we're not really covering too much today, I'd be a hold. Okay, From a short-term perspective, I'd be getting in today, okay, for a short-term trade for maybe 2 or 3 weeks with the view of it going to 51 or 52, okay? I'll show you how to price up the stops and things right now, okay? So let's pick a mini warrant. First thing I want to look at is the built-in stop, which is $40.52. That's the built-in stop all the way down here. That's far enough away, so I'm happy with that. I don't use the built-in stops, guys. They're just there, okay? Excuse me. I just have to be aware of them, so I don't want them to be too close to the current market. I don't want to be stopped out prematurely, right? My stop I'll be looking at will be around this 47 level, okay? To give it maybe a little bit of leeway, 46, okay? Because 46 is support through here. So yeah, I'll be building this trade around the idea of stopping out if this support level here broke around 46, okay? All right, so back over to the mini warrant calculator. The mini we're going to be looking at is BHP KCH. Okay, the code is BHP KCH. All right. Okay, so we need to ascertain the price of this mini. That's the first thing we need to do. So I'm going to come back across to my terminal here. I'm just going to add this into my watch list. All right, so that will be in through here. And the price, so I just need to get a bit and ask. So it's a bit of a smaller screen today, guys, what I'm used to working on. So cut me off a little bit. $1.27, I can just see that there. The other way is just clicking on it here. So sorry, 12.25 is what we're looking at. 12.25. Second. Over here. Okay. All right, so the way that automatically updates the price, okay, through here, then we pick a risk amount. All right, so let's just say we're going to do roughly 2.5 gram risk. What does that look like from a dollar point of view? You can change the dollar or percentage. All right, so if it gets back up to around 50 or 51, looking at anywhere between sort of 580 to 760 odd dollars, okay? So we're looking at, 2, 4, 6 to 8% movement on BHP. It's doable, guys, right? That is very, very doable for BHP. It does not take much for this stock to move 8%. Right? You can see here on the chart, what does 8% look like? Okay, roughly out where I was saying, about 51. Okay, so there's a few ways of measuring and looking and getting a feel for that. All right, so the more important thing is always managing risk, though. Okay, so as I said before, we'd be putting a stop in around just below sort of 46, 45, 60, something around there is where you want to have your stop. So even if it fell all the way down to 45, I'm losing $570. Now, if we start talking percentages, look, we don't really want to lose much more than 20% on a trade, and we want to be making 20 to 30% on a trade, right? Minimum, making 20 to 30% on a trade, okay? So that works for me because I probably won't ride it all the way down to 45. I'd be getting out at probably 20% loss, really, looking at that. Because, 46 is about support. I'll let it go through that support a little bit. Okay, so to answer your question there, okay, there's a question about BHP, when's the best time to enter. This is what I'd be doing today. If this afternoon this bullish signal remains, okay, I'd be doing a BHP KCH. You got to pick your risk. I'm not telling you how much risk on this. That's personal. But for me, there's enough profit from a percentage point of view. If BHP comes back to resistance levels, okay, which is around both of this, 6 to 8% move, all right, you make 23 to 31% on the upside. And as long as you're diligent with your stop, you shouldn't lose any more than 20%. There's always risk that the stop's going to gap down. The stop's going to gap down. All right, I can't control that. You can't control that. Be aware of that risk, okay? What we can control is what we will control, and that is that if it breaks 46, we close, right? And that's where discipline comes in, okay? So we can put as many, this might be a recommendation today to our clients, guys. That could happen, right? If everything looks the same as what it does today, fundamentally, we like to stop. The only concern I've got on this recommendation right now is it's a bit overbought. So I would be very diligent in closing this if things didn't really move up in the coming weeks. I might not even wait for that stop. And this is the thing, guys, don't go rush out and trade this, right? Please don't, okay? If I put this out as a recommendation to clients, you're not going to know when we're getting out. I might get out tomorrow because the market turns around and you won't know that, okay? So just don't jump in on the back of somebody like me saying, hey, this is a good trade on the webcast, because entry is not everything, guys. We don't make money out of entry signals. We make money out of the whole system of what we do and our rules that we teach, okay? You know, we make money out of getting out of the trades at the right time. So entry is important, okay? But you don't just get in and start trading based on entry, because there's so much more to our trading plan than just entry, right? There's picking the right strategy, and there's also managing your exits. Okay, exits just as important as entry, guys. It really, really is. All right, so that's BHP at the moment. If you flick across to some of the miners, a lot of the miners are in a similar situation, although Fortescue's right at resistance today, and that's why I'm not talking to you guys about Fortescue, but similar sort of thing. Nice, healthy uptrend through here. Fresh bullish signal, but couldn't clear through resistance. So Fortescue wasn't really at the top of my list. The other miner I was looking at was Oz Minerals, but also at resistance today. Okay, so if I go out, similar sort of story, big roaring uptrend. A bit. The difference is with this one, in the short term, it's not overbought yet. Okay, maybe a bit from a long-term perspective. The good thing here is it had broken into all-time highs. It's taking a bit of a breather. This could be the start of something, and this would be something I'll be looking at tomorrow. I want this resistance level to break, guys. All right, so we had a period of sideways here. I want to see this resistance break. That will put this stock back into an all-time high, and it will pique my interest once again. Oz Minerals, is a gold and copper miner. Okay, so gold was up quite a bit overnight. Copper's been holding at high levels for quite some time, hence why this stock has performed quite well recently. But you can see here, you know, our indicators are a bit oversold. The stock's gone sideways. It could be ready to crack higher. This would be definitely high up on my watch list today. Okay, Newcrest Mining, another gold miner. Okay. Showing some interesting signals, although it's gapped higher today. It's a very big move for this stock. Big move in gold, right? And that's why it's moving. All right, so let's have a look at this real quick. So this stock here is an interesting one. Okay, very interesting, because really the trend, there is a long-term trend there, but it's irrelevant. Okay, what's the current trend? It's actually down over the medium term, isn't it? Right. So you know, you could be drawing something like this in quite easily. I don't like cutting too much data out, but in this case, I'll take it, because I'm getting a lot of touch points through here, and here. Okay, so downtrend in play. The question is, has it broken that today or not? Right, big question mark. There's a double bottom. Right, and another sort of technical that we like to look at. So this could be a signal of this long-term trend. 1 year trend, 2 year trend. What is it? 2 year trend. Okay, 2 year downtrend breaking. Could be, right? So today's not the day for me, but if it fulfills this pattern, and you can go Google what a double bottom is, okay? If this pattern fully fulfills, okay, this could go for a nice big run over the next few months. So this is another stock that I've got on my watch list. I'm watching it very carefully. I'm not keen on it today. It's gone too much too quickly. It's at resistance. It's at my moving averages. There's a few things that I'll look at technically that are stopping me from getting into this. I'm not going to go into too much detail here, but it's another one. Even though it's got a bullish signal, guys, I'm not getting in. See, BHP's got the bullish signal. I'm getting into that one. This one I'm leaving alone. And there's a handful of reasons why I'm leaving that alone today. Too much to teach in one session. All right, so the other stock that I'm really being right up high on my watch list is Sonic Healthcare, SHL. Okay, now this particular stock's been uptrending for quite some time. It got a bit overheated and it needed to pull back. Okay, so we've been waiting for this pullback to happen all the way through this sort of rocket up on the uptrend. It needed to give it back. Right, it was just that's too steep, guys. Right, way too steep. The steeper the trend, the shorter it will last. That's the golden rule. Okay, if it's really, really steep, it won't last for a long period of time. But these slow and steady trends on a nicer angle will hold through the longer term and until they don't, right? And we trade them until those levels break. And once those levels break, we shift our view, move to something different, okay? All right, so we're back at trend. We're back at support. We're back at the 200-day moving average. We're extremely oversold. We're just not breaking higher yet. So this is right top of my list, guys. If I get the right technical signals, this will be one of my next trades. All right, only if. There's no speculation here, guys. There's rules. I'm getting in on those rules. I'm getting out on those rules. That's it, okay? And I would be looking at, once again, a mini warrant or an options trade. A few others that are getting close. One's Wesfarmers, right? We're watching this like a hawk every single day as well. We've had a bit of a double top happen up here. Overall, the trend has been up, right, strongly, okay? But we need to make sure this isn't the start of this trend starting to correct to the downside, okay? There's some signals up here suggesting that trend's ending. We need some more confirmation, but pretty keen to do a bullish trade. If it comes back down, one of these two support levels, we'll be looking at a trade if the right signals come up. So once again, that's a bit oversold and keeping an eye on it. The other stock that I like right now is Reece, okay? I still think, fundamentally over the next sort of 2 to 3 years, I think we're going to get a lot more immigration back into Australia again once COVID calms down. I think the government's going to have to boost the economy, right? It's just the age-old game Australia keeps playing, which means more housing, more construction, more building, okay? Now, Reece also supplies, the supplies all around Australia. So they're pretty big, right? They're the bigger of the plumbing suppliers in Australia. It's finally come back down. It went too hard last year, right? It went way too hard. If that comes back to trend or support, okay, there's the averages through, some of my averages that I look at through here as well. It could be getting close. So I'm just watching this for when the downward momentum ends and we get a fresh bullish signal, okay? So, at some point in the next few months, this might also be a trade that we'll be looking at, okay? So, look, that just goes through a few of them. Look, guys, BHP is just a good example at the moment, right? As I said, it's a bit overbought, so we're going to be, this one, you've got to watch like a hawk, okay? Because this can only go so far, right? At some point, it's going to have a small pullback. Now, one of the reasons why this has gone so far is iron ore, right? Iron ore continues to climb. It's staying strong today. We're back up near the 130 mark US. It did drop below 100 at one point, and hence why this is rising. The other reason why I still like the miners here, guys, they're a bit of a value stock that has growth, right? It's an interesting one. They have such a good dividend. They're running at such a cheap price to earnings at the moment. They're actually value stock, okay? So value is more favored right now because with interest rates going up, okay, well, they're not necessarily going up, guys. In Australia, they're probably not going to go up anytime soon. People are predicting August, right, for Australia. But the noise is that the Fed's going to take action on inflation. Everybody's talking about it, and that's why you're seeing the NASDAQ and high growth tech stocks fall off dramatically, okay? Now, where's that money going to go, guys? People are pulling out of growth. They're pulling out of bonds. Where's it going to go? Well, it has to go towards value, right? And that's what we've seen, and that's what we're seeing currently. And that, for me, is the current trade. It can change on a dime, though, guys. Understand that if you're getting in on BHP at these highs, right, you've got to be prepared to be getting out of BHP in a couple of days or a couple of weeks' time. When it tops out, when iron ore tops out, when the mood towards interest rate changes. And that could change at the end of next week with the Fed, right? In the short term, the market changes its mood on a dime. And as a trader, you've got to be prepared for that, okay? So if you're going to follow into this trade, and I suggest you don't unless you know what you're doing, okay? And this is why we run courses, guys. And I'm a big advocate for education. I came into this through education, guys, okay? I came through as a client 11 years ago, right? Did the course with Carlo and just ran with it, okay? Enjoyed it so much that I ended up working here as a trainer, and then I moved my way up the ranks to a general manager and running the trading desk, right? So I swear by it. I honestly swear by the education. If you go out alone without the education, you are going to lose money, right? You're going to lose money before you make money. You might have a couple of good trades, but I mean, over the first year, when I've seen people go at it for their first year without being educated, yeah, the results can be horrific, especially if you're trying to trade options, right? Options is so complicated. You really, really need to have education around it. Mini warrants are less complicated, but they're still, you've got to be good at picking direction. So you need to learn technical analysis. You need to learn a set of rules that's going to give you a probability of success of picking the direction of the market. Okay. All right, so I want to show you one more strategy before I hand you over to Caro, right? And this is going to be an option strategy. So you've had an example of a mini warrant. I've shown you two. I've shown you one on HiFi that we've opened and we've closed. I've shown you a potential mini warrant trade today on BHP. Now, with the market going sideways, there's been a strategy that's been working extremely well for us over the last sort of 3 or 4 months. And the reason why I want to show you this, guys, is that the markets go through phases. And depending on what phase the market's in, there's certain strategies that work best. And it's another additional layer to help you get a better probability of success of trading the markets. So as you can see, the markets either trend, right? They might trend up or they might trend down, okay? When they're trending up, they usually go through the, up the staircase. If they're trending down, they usually drop down the elevator. In this case, I think they plunged off the building, okay, after COVID. That was crazy, that COVID pullback. I've never seen anything like it. That was unreal. But nonetheless, it's either moving directionally, or it's going sideways, okay? And through these periods where you've got tight sideways movements, trading mini warrants in direction isn't necessarily ideal, okay? It's whipping around so much that directional style of trading is not ideal. With options, you've actually got the ability to trade the sideways movements, right? So with options, there's something called time decay, right? That decays away the value of an option. Now, I'm not going to go too much into the dynamics of how this works, because once again, I would be here for 3 days trying to explain it to you, okay? It is complex, but there's ways of simplifying it. And I'm going to show you how we simplify it. This is our options calculator. Just like I showed you the mini warrant calculator before, this is an options calculator. This is going to show you, okay, if I build a certain strategy in a certain way, what the payoff's going to be over a period of time, okay? So there's 4 different products to build this one strategy. Yes, it looks very, very complicated, guys, okay? But it's not that complicated, right? We've simplified it down. We call it our cookbook. It goes through, gives you the different strategies and how to set them up. As long as you follow the instructions, it's really actually quite easy, okay? Now, this is a trade that we've recommended out as well, okay? I'll quickly bring that up. Just give me one moment. Yeah. Okay, so this is a trade we sent out on the 10th of January, okay? The strategy is called a short iron condor. I know it sounds confusing, but this makes money on sideways movement, okay? The risk on the trade suggested minimum would be around 4,400, okay? We got 13 on the way in, okay? And 1 discretion, like sometimes we ask for a bit of discretion to get the trade built. You see the full analysis and the payoff diagram there as well when we got in, okay? So I'll show you what it is now. So we received money to get into this trade. Don't get hung up on that. But basically it's now worth 11, okay? So we're up slightly on the trade, okay? Up about $120 on the trade so far. See how it says expiry here? The goal of this strategy is to make it till expiry, which is the 27th of January, okay? Now, what I want to show you, which is the pretty cool thing about options, right? You won't see this in any other type of financial product. It just doesn't exist, guys, right? You cannot do this with mini warrants. You can't do this with other types of strategies, okay? Have a look at, so this is dollar profit or loss. So you see if it moves down a lot, I start losing money. If it moves up a lot, I'm making money at the moment, only because it's down towards the support of the channel, okay? So the goal is, guys, is to get the XJ to sit in the middle of the channel, okay? The way we've structured this, we want XJ to sit around the middle of the channel and we want time to erode. That's the best case scenario. So let's look at the middle of the channel. The middle of the channel is 74.50. All right. So if I take us to 74.50 on the calculator, you're going to see where we start making some money, right? So just give me a second. Okay, so 74, right? I'll be making today $500. This is set on 1 day increments. Tomorrow that goes to $600. 22nd, all right, which would be the weekend. Let's get across to Monday. Monday would be what, the 24th? Yeah. So if I hold this through to the 24th, okay, and I'm in the middle of the range, I'll mark $1,000. And the profit caps out at $1,300. Okay. So what's happening here, guys? I'm not making money out of movement, am I? Right? If it goes up a lot or down a lot, I'll lose a lot of money. Okay. But what this strategy does, guys, is if I stay below the levels I set, so the levels we've set is 76.25, okay, so then stay below 76.25 on the index or above 72.50 on the index, and I'm going to make $1,300, okay? You cannot do this with any other product, right? Options is the only way you can do this. You can trade options here in Australia. Options in the US are massive, guys. They're huge, right? Australia, they're less known. Okay, but they're huge in the US, absolutely massive. But you can trade it here, XGO, great liquidity. We trade a lot of trades on the XGO, you know, top sort of 20, 30 stocks. We do a lot of strategies and trading and recommendations on as well. So look, I'll just show you that on the chart so you get a feel for it, right? So 72.50 is getting a little bit close, isn't it, guys? Yeah. All right, so we are sweating it a little bit at the moment. We don't think it's going to fall any further between now and next week. If it does go through 73, okay, through support, there's things we can do and we will do, okay? So we will take action or suggest action to our clients. So at this stage, it's holding support as we expected. We've got that little doji signal. So at this stage, we're feeling okay today. We won't be touching it today. All right, but if it falls through tomorrow, we might force our hands to do something. And if it does, once again, we're not going to lose the risk on the table, right? We're going to take action, right? So if it breaks through 73, as I said, we lose about $600 and we close it down, okay? Or we can do other things. I'm not going to go into rolling, and there's all sorts of things we can do with the strategy as well, right? So there's a lot you can learn in the trading world, guys. There's a lot more than what you will read on social media and what you'll find out there. You know, it's huge, okay? The options really gives us a higher probability of success in times when the market is not trending anymore. And if you compare the XGO to the S&P 500, right, XGO has been going sideways since the middle of last year, guys. This strategy has worked perfectly through this period, right? I've been doing a lot of these with a lot of people recently, so it's been really, really good. Where the directional trading, some of our directional trades, we've been stuck in for a few months, right? Harvey Norman was a good example of that, okay? You know, we got in sort of late last year thinking that it was going to break higher. It pulled back into the channel, went sideways, and it's just been stuck sideways ever since, okay? Many people got out of that trade break even yesterday. But it just shows and highlights that you can have these sideways sort of periods, okay? And they're hard to predict on how long a stock can do this. As the strategy I just showed you would be perfect for that type of movement. So, yeah, I guess it's just knowing the right tools to use for the right application, right? Okay, so, you know, if you've got a nail, you don't want to be using a screwdriver, you want to be using a hammer, right? So, it's sort of situation here. That if the stock's going sideways, you're not going to be really looking at mini warrants. You're going to be looking at more of a sort of a time decay type option strategy. All right. All right. So I've got Caro back here. I think that's really everything I wanted to show you guys. Okay. I just wanted to give you some sample sizes of, you know, how we pick direction, how we analyze the market, and then how does that relate back to doing a trade, and how do we manage trades? Okay. So I've shown you a bit of all that. Once again, you know, if you've got any further questions, please put them into the chat box now. I think there's a few that I've missed. I think I might. No leverage. There was leverage on the mini warrants there. So I think I definitely demonstrated that. Oh, sorry, I've hit that down. So I've got the screen of I'll move my other screen back a little bit. Lindsay, is a good question. What broker do we use to short sell stock? We don't. We use what we call a mini short, which allows us to short the stock without having to have a facility to do so. Okay. Many brokers allow you to do mini warrants. Okay. So if you trade through us, you can do mini warrants. Not many brokers allow retail clients to short the stock directly.
It's short selling options.
Oh, short selling options. Sorry, I missed that. Most of the discount brokers don't do options full stop. All right, so you use sort of guys in the market like South Wealth and Open Markets and what's the other one? Superhero. None of them do options. So you've got to use like we use Phillip Capital, and you can trade options through us. If you trade through us, we've got a full desk of advisors. There's 7 of us here that are all very, very knowledgeable around derivatives. Got a lot of education between us on derivatives, and that's what we do, right? That's what we specialize in. So, you know, I think I might let Cara sort of answer some of these questions in a little bit more detail. Just a second.
I reckon there's more, and I say this humbly, there's more options knowledge in this market, in this room, than there would be in like anywhere else in Australia, probably. Like, there's not a lot of companies out there who trade options. Specifically, like our company focuses on that and minis. So there's companies out there that facilitate it for people who kind of knew what they were doing. But this is definitely our niche. And Tim and I have been here for 10 years. Sam's been here for, I don't know, 7. And he knows, I mean, yeah, the amount of options knowledge is quite a lot here. So that's why we're able to survive as a business, I reckon, is that aside from our education and support, there's not a lot of people who can kind of give you the education and support specifically for derivatives trading so we can. Yeah. So if you want to be able to short sell options, which I would say you kind of need to know what you're doing. You might already, I don't know, but if you want someone to do that through, you can always open up a trading account with us and we can help you with it.
I suppose if you're talking short sell option, I'm not sure you mean like a naked sold put or something like that. Not many brokers in Australia allow you to do naked positions anymore. That's something of the past. I'm not sure if that's what you're exactly referring to.
If you got the cash though.
Cash covered fine.
Yeah, if you got the cash. But you know, it depends what your goal is, right? Sold puts that are cash covered are perhaps a bit more of like an in-between investing and trading. Like it's a little bit more to do with yield on a portfolio, that type of stuff. Maybe
that's how we use it.
Yeah,
that's how we use it. So we sell to make more stock and not pull back, but earn some credit along the way.
Yeah, like I mean, as a quick example of that, I mean, if you guys aren't in a rush, which you know we're kind of not. Where's the? Oh wait, hang on, sorry, it's probably on here, isn't it?
Yeah.
Can I go back down? If something like this happened, right, on BHP, and BHP fell off, right, and that was part due to report, the delisting of the DFS, the WPL thing, and iron ore, obviously, right, that was probably the biggest one. But even if you got down here or something like this, picking bottoms is not easy, and it's always easy to look back in hindsight. But you know, we were encouraging, I think, a couple of our clients to consider sold puts down at this level. And if you don't get exercised, you just made a few $100 or whatever it is. Yeah. If you do exercise, you pick up some more stock. You know, the other way that you can do the short selling of put options is to buy against it, which Tim ran through in terms of the Condor and bull puts. We like to do that strategy a lot. But if you're not cash covered and you don't have a bought put, Tim, as you correctly said, you're naked, and we don't do that.
No. Look, we're not believers in doing naked sold put positions. Like, you know, in this example, if you wanted to do something naked to get a good big credit in, just buy a couple of dollars away, right? At least you've capped your risk, you're capping your margin, the broker's more comfortable with it, you know, and it's less capital intensive if things go wrong, okay? So there's reasons why we wouldn't suggest it anyway. And we don't teach those strategies anymore.
Yeah,
and we stopped doing that type of trading maybe 8 years ago. But, you know, it was a little bit in the beginning when I started, but yeah, most brokers have put a stop to it. I know Tom's second himself.
Yeah. for good reason. I mean, this is not. We're happy to. We indulge a lot of trading ideas because at the end of the day, our business is built on you guys being successful. So if you guys come to us and be like, "This is what's working for me," can I do it? We always want to help. But the reason why those things aren't allowed anymore is because it just, kills people. It knocks them out blows them out of the water. And the old saying is that like $1,000 margin call is your problem, but like $100,000 margin call, that's our problem, right? And so we're protecting you and we're protecting ourselves. But the irony of what's funny about that whole thing, and this is what I don't understand, is it's so easy just to buy a put like $2-3 below. Yeah, and it just protects you. It locks in your risk. Right. All right. Unless there's any other quick questions, did you answer the question about how much they need to begin?
No.
I might cover that. All right.
Thanks, guys.
By the way, it just goes to say, anything that Tim covered, if you got a question about it, if you're like not particularly sure kind of what he meant, but you didn't really want to hold him up or whatever, you're welcome just to pick up the phone and give us a call. We're a small business, as I said. There's about 11 of us in the office. Most of us are advisors. All of us pick up the phone. We're very accessible and we're local. So we're down in Melbourne. If you want to come into the office, say hi, see our space, you're welcome to do that as well. But I guess what I'm trying to say is that we're happy for engagement. So the only thing that I really wanted to touch on was from the last session, and I assume this session, there was interest in some of the education that we run. So I'm going to quickly run through that, if that's okay. I want to remind you from something that we ran through last session, and again, if you kind of know everything that we've already taught already, which is fair enough, then this will really resonate with you, right? It's good to kind of boil things down to everything that you need to learn, right? Some people, you might be in the beginning of your research phase. You might be looking at what is it that I need to learn? A lot of people go through self-education first. I know I do, right? If I want to learn about a particular topic in any great detail, of course, you go and educate yourself first, right? And then depending on how serious you want to take it, depends on whether or not you want to go and pay someone to educate you and support you. If you're at that stage where you're just kind of researching, you're kind of on that self-education path, then these are the three things that you need to focus on. And what brings them all together is a set of trading rules. So this webcast mainly focused on picking direction, as I'm sure you're aware. That's obviously a very fundamental part of trading. If you can't pick direction, then you can't really make money. But at the same time, you also know that you're going to lose on certain trades. So risk management kind of steps in to make sure that you can limit your losses and manage your capital effectively. Don't put all your eggs into one basket. This kind of simple stuff. And if you want to be a trader, you want to be like a short-term trader that takes advantage of shorter-term movements, then it makes sense to have different strategies as well, because the market isn't always exactly doing the same thing all the time, right? So sometimes the market's going up, sometimes it's going down, sometimes it's sideways. As we mentioned at the start of the webcast, the broader pattern might be sideways, but there's periods of times where it's going down throughout that period, might be going up, might be tracking in a tighter channel. And having different strategies allows you to trade those things, right? And that's why we trade options. That's why we trade minis. I'll remind you something I said in the last webcast. The other good thing about having different strategies and different toolboxes, I believe, is that you analyze the market with less bias as well. So a good analogy for this, or metaphor, is if the only tool you have is a hammer, then everything starts to look like a nail, right? And so if your only strategy is to make money in bull markets, then I feel like that's a filter that you have over your eyes a little bit, and that's how you start to interpret things. Whereas, like us, if you don't, if you have a few different ways that you can trade the market, then it doesn't really matter what it's doing. I mean, of course, we all want the market to go up because we all have investments, right? But in the shorter term, it doesn't really bother us if the market's falling and going sideways, because we know that we can trade that. And so I feel like we analyze the market with a bit of a less biased lens. Now, again, what kind of brings that all together is a set of trading rules, right? As I'm sure you guys are aware, especially if you've done your research, there's a lot of different approaches to the market. We're just one of them, right? So you can certainly pick direction many, many different ways. I would automatically be careful of people who pretend to have like a secret way of doing something, or a silver bullet in some ways. The reality is there's no free lunches in this market, and you have to work hard in order to be good at this. But there's certainly a lot of different ways that you can get to it, right? A lot of different ways to skin a cat, as they say. I don't know where that saying came from. It's very morbid, really. Don't know who's skinning cats, and I don't know why they think that there's a lot of different ways. But anyway, what really can kind of hopefully bring all that together is a set of trading rules, right? If they're, all the research that you've been doing, try to boil it down into a step 1, step 2, step 3, step 4 kind of process. And then depending on your success, after practicing that, you can tweak it. You know what I mean? And you might find that your rules get tighter. You might find they get looser. That's all part of it. One of the benefits that we provide, though, is we can actually guide you in that, right? So it's kind of hard to help yourself if you don't know what you're doing. I mean, books can help, online things can help, but if you're trying to tweak your rules, it's just without experience, you don't like. It's a lot of trial and error. And if you're someone who kind of learns by having to place with real money, and there's a lot of people who are like that, that trial and error can kind of get expensive anyway, and you might have just been better off paying for a course or using our services, right? So why don't I get into that? I could just run through for the next 5 minutes, not even, the beginner's course that we run. So it's called Technical Trading for the Australian Market. Not a very creative name, it's a very literal name. And you can tell what it really kind of focuses on. But it is our beginner's course. So if you're someone who you're at that research phase, and you're realizing that the kind of mountain that you kind of have to climb, this is a great program for you to start, right? If you've also got some experience, but you're finding that you're not really getting the results that you're looking for, then this is a program that I think could help you as well. I know this is going to really sound self-serving, but if you pick up even just a couple of things that help you make money, then over the long run, it's completely worth the investment, right? Trading is a good. All right. I don't know what happened there. Sometimes the internet's a little bit. We're in an old building. So, yeah, I was not exactly sure where I cut out, but what I was saying was that the trading is certainly something that you do for, I would say for the rest of your life if you kind of stick with it, right? There's other things that could dictate that, but if you think about it, if you just become like perhaps a part-time trader, there's no reason why you can't take that into retirement. A lot of retired people like to use it as a form of income generation, but also to keep their mind active. It helps fill in some of those hours. But anyway, so even if you've got a bit of experience and you pick up 1 or 2 things, then it becomes worth it, in our opinion. The idea is to kind of take all, all the things that we've learned over the past 10, 20 years, and to try and teach that to you in a much more efficient and fast way, right? I mean, you can spend hours learning about this stuff. And if you've got no one to guide you, then it could be a lot of hours. A lot of people who come to us have tried that path of self-education first. And I don't know if you remember in the first webcast, if you're going to go down that path, at least have a mentor that can check what you're doing, kind of thing. I think it's good to have a solid education and a mentor, but at least have one of those, right? Trading is high risk. Don't underestimate that. There's a lot of people who lose money in the first year of their trading, even with a solid education, right? So just have a think about that. Now, the session starts with a 2-day face-to-face program in our boardroom. So we just do it where we are now in our boardroom. We seat about 8 to 10 people. COVID has made that very difficult, as I'm sure you guys are aware. So we actually do a live stream as well. You'll be able to, it's like this, right? It's like a webcast. You'll be able to see Carlo's face, you'll be able to hear, you'll be able to see his screen. Sometimes he goes and grabs a whiteboard and puts it in the background. So it's like being in the room, right? Now, if you want, like plenty of people fly down to come and do it in Melbourne, but again, with the whole situation at the moment, we leave it open to you, right? Whatever you feel comfortable with. But you come into the office, you get to see us face to face, meet all the people. Now, Carlo Castellano is a highly successful professional trader. He's been trading for like 25 years or something like this. And he's basically semi-retired. So he co-founded Trader Circle back in 2005. And he basically, I think maybe 4 years ago, decided to kind of just sit back and relax a little bit more. And he just trades from home and does a few other things. So you're learning from someone who not only is a fantastic teacher, right? But also someone who's got real life experience, who used to run one of the busiest options trading desks in Australia, and who still actively trades and gives traders recommendations to this day, right? So you learn his exact trading rules, right? These are the rules that I was taught, that Tim was taught. This is the rules that all our clients are taught as beginners, and they're a great place to start. So they really bring together all those things that I was talking about, right? They bring together direction picking, strategy, and risk management. And those trading rules give you a step-by-step process in which to apply those, right? Kind of, like I said, takes everything out there and boils it down into a step-by-step process. The picking direction is mainly focused on technical analysis. It covers in greater detail a lot of the things that we've run through over the past two webcasts. The strategies focused on mini warrants, so mini longs and mini shorts, looking at which type of ones to pick, looking at payoff matrices, identifying where to place stops. I guess that comes more into risk management. So we'll cover when to place stops, entry and exit signals, how to preserve capital, how to manage your trades properly, right? So we think that by piecing together all these three things will give you the best chance of success of becoming a successful trader, right? Beyond the 2 days, there's a lot more extended learning, right? We can't really teach you everything in 2 days. It's very difficult. Where a lot of your training will come from is over the next 8 weeks, right? Now, part of that is having access to our members area. Our members area has a whole bunch of resources to assist you with your learning, but also to assist you with your trading when you decide to start with real money. There's training videos that cover the core topics. There's daily webcasts. It's very similar to the one that we run today, Monday to Friday. There's market updates. We'll give you trade suggestions. So if we see a trade that we like, we'll send it to you and say, hey, this is the trade. This is the reasons why we like it. This is the recommended minimum contracts. This is where we're going to get out. If we're for a profit, this is where we're going to stop loss out. So a fully planned trade that you can enter if you want to. It also includes all the technology. So we'll give you the trading software that we use. We'll give you the payoff matrices and the calculators and all that type of stuff, right? All those tools that you kind of need. And I would say most importantly, you get your own personal trainer. So as I mentioned to you, our business really shines on support. We're happy to spend as much time as you need in order to get you good at this, because at the end of the day, education for us is not a profit center. We actually don't really make money from our education. It's you trading through us that really keeps open our doors. So it's within our best interest to get you good at this, to get you profitable so that you continue to use our services, right? So we actually give you your own personal trainer who you can call as many times as you like. They're there to really kind of run point for you, make sure that you're doing everything right, correct your mistakes, give you trade ideas, correct your technical analysis, and then really hold your hand as you transition to live trading, right? During that 6 to 8 week period, you'll be working with your trainer, but you'll also be running we'll also be running a paper trading competition. So paper trading is like real trading, but with monopoly money. So we're trying to simulate a real life environment without actually putting real capital on. Now, during that period, you can place real trades, and I think we'll work with you one-on-one in that, talk about that in context. But the paper trading competition, the winner gets a small prize, and you kind of just pit it against your classmates, right? The people who did the course with you. The idea is to make as much money as possible with the strategies that we've given you, using the technical analysis and the trading rules that we give you. Yeah. Now, it's meant to be like real life. So during that competition, you can call your trainer and say, "Have you seen any trades today? Can you put that trade on for me? What's my trade doing? Oh, it's in a profit. Okay, can you close that trade for me?" You can also email in your questions, or you can execute the order online if you want. So it's like a demo trading account, except it's a competition, right? When you're ready to transition to live trading, we kind of want that to be fairly smooth. We don't want there to be a psychological difference between the paper trading to real trading, right? Because theoretically, you would only transition to live trading once you've kind of proven that you've done really well on paper trading. So we want to try and get that across as much as possible. Your trainer's there. They basically just turn into your advisor. You're welcome to, work with me or Ben or Tim or whoever. But the idea is that you after the 6 to 8 week period, most people are kind of ready to start trading with their own money. So like I said, some people are beforehand, but we encourage you to get some practice in. Yeah. Now, in terms of the investment of the course, it's a deposit of $995, and then there's just one more payment of $995. So the total investment is just under $2,000, and that includes the 2-day workshop. You can do it in our boardroom with us here, face-to-face if you want, or you can do it live stream online. That 2-day workshop, we only take in 8 to 10 people. So we keep the groups really small just so that we can focus on you as an individual as much as possible, give you as much attention as you need, whilst at the same time, still keeping good group dynamic. It also includes access to 2 months online training to our members area, where there's plenty of videos and trade suggestions. You get access to the webcast, etc. You get access to all the trading platform technology. And again, most importantly, you get your own personal trainer. So yeah, very reasonable for a 2-month program that includes also a 2-day face-to-face session, plus all those online resources. The next dates that we have are the 5th and 6th of Feb. So that's right around the corner. If you'd like to, I think we've still got a couple of spots left. And if you can't make that, then the 26th or 27th of March. So you can see we don't run them very often. We run them every month and a half to 2 months, right? Again, we really want to be able to give you as much attention as possible so that you increase your chance of success, so that you continue to trade through us. We're going to finish up there. If you are interested in the course, then type in more info. If you'd like to book into the course, you can type book. And have a chat to my colleague, Jared. Jared is our market advocate. He basically helps place people where they need to go. So if you're perhaps more into trading, he might place you into this course. If you've got more experience and you want to learn options, he might place you into that course. If you're, that's not suitable for you, then he can also talk to you about Emerald Financial as well. So he basically is our market advocate and will help place you in the right area. All right. You're also welcome to talk to me or Tim or whoever. All right. I think we've gone probably over time, but thanks very much for joining us today, guys. I can't see any other questions coming through. If you do think of something, you're always welcome to give us a call back. All right. And we can always have a chat then. All right, guys. Good luck and happy trading.